What if everything you know about government debt is backward? What if the thing we're told is a national weakness? Is actually the source of the greatest political power ever created? And what if the global financial system isn't built to pay off debt, to make sure debt never ends? Because buried inside the modern economy is a mechanism quiet, invisible, and shockingly simple that transforms national borrowing into a permanent, expanding source of control. It's a system so effective that every major country on Earth now depends on it. And tonight, we're going to expose it. To understand how global debt became a weapon of power, we have to rewind more than a century back to a moment when governments were terrified of one thing: losing control over money. For centuries, money was tied to something real: gold, silver, land, commodities. Rulers couldn't magically create more of it. Their power was limited by physical resources. But the 20th century changed everything. Governments discovered a loophole, a financial tool so powerful it would reshape the world: the ability to borrow money that didn't exist yet. And the institutions that allowed it, central banks, treasury departments, and international lenders, weren't created to protect citizens. They were built to protect the system. This system had key architects: Paul Vorburg, who pushed the blueprint for the Federal Reserve; John Maynard Keynes, whose economic theories gave governments permission to borrow endlessly; the Bank of England, the first central bank to perfect the art of debt-powered governance; and later the IMF and World Bank, ensuring the model spread globally. But this story isn't a history lesson. It's a chain reaction, one that started with a simple idea and evolved into a world where debt became the strongest political tool ever invented. Origins: how debt became a feature, not a problem at first. Government debt was a temporary tool. War, infrastructure, emergency funding. But something strange happened between 1914 and 1971. Debt didn't shrink after crises, it only grew. And each time, the system adapted to allow even more. 1914 to 1918, World War I forces massive borrowing. 1930s, the Great Depression pushes governments into stimulus spending. 1944, Bretton Woods creates a global financial order based on the US dollar. 1971, Nixon ends the gold standard, freeing money from physical limits. That final moment was the real turning point. For the first time in history, governments could borrow money backed by nothing but trust, and central banks could create new currency with a keystroke. Debt was no longer a burden. It became a product that generated interest, power, influence, and most importantly, control. Rise, the system that fed on its own growth. By the 1980s, governments realized a brutal truth: the more they borrowed, the more powerful they became. Debt allowed them to expand the military, build social programs, stimulate the economy, influence foreign nations, control financial markets, keep citizens dependent on the system. But here's the twist most people never see. Government debt creates private wealth. When governments borrow, they issue bonds. Banks buy these bonds. Pension funds, corporations, investors, all rely on them. Central banks use them to manage the entire economy. If a government tried to pay off all its debt, the global financial system would collapse instantly. Debt became the foundation, not the flaw. The more debt existed, the more stable the system became. Paradox, but a profitable one. Breaking point: when debt stops being national. Around the 1990s, something shifted. For decades, governments borrowed for national purposes. But globalization changed that. Debt became international. Countries no longer borrowed from their own banks. They borrowed from each other. Japan buys US debt. China buys US debt. The US buys European debt. Europe buys emerging market debt. It's a circular network so tightly woven that if one strand snaps, the entire web trembles. This created the most dangerous feature of modern finance. No country can afford for another country to fail. Suddenly, debt could be used to pressure nations. Loans became diplomatic weapons. Bailouts became tools of influence. Entire countries became dependent on the IMF or World Bank. Debt was no longer money. It became leverage. Fallout: the era of permanent crises. 2008 exposed the truth. When the global financial system began to collapse, governments didn't respond by reducing debt. They responded by creating more than ever. The US printed trillions. Europe launched massive bond buying programs. China borrowed at historic levels. Japan pushed interest rates below zero. Instead of collapsing, the system evolved. Debt became oxygen. Remove it, and the global economy suffocates. This is why crises no longer reduce debt, they increase it. The system is self-reinforcing. Debt gives crisis, gives more debt, gives larger system, gives larger power, gives larger fallout. It is a cycle with no exit. Failed fixes why the problems never disappear. Governments claim to fight deficits, they promise budget cuts, they announce repayment plans, but behind the scenes, they know the truth. Paying off debt would destroy their power. Attempts to fix the system always fail because voters punish governments that cut spending. Politicians fear economic slowdowns. Central banks rely on debt-based assets. Social programs depend on continuous funding. The global economy requires constant money creation. There's no incentive to solve the problem. The system works because debt grows, not in spite of it. Modern parallels, shocking patterns today. Global debt is now over $315 trillion, more than 3x world GDP. The US adds $1 trillion of debt every 100 days. Japan's debt-to-GDP ratio exceeds 260%. Over 60% of emerging nations owe more to foreign creditors than to their own citizens. Central banks worldwide purchased $25 trillion in government bonds since 2008. The pattern is identical. Everywhere, rising debt, rising government control, rising central bank influence, declining monetary independence, increasing dependence on the system, and the most shocking truth, a world without debt no longer functions. Government debt isn't a weakness, it's the core engine of modern power. It finances control, influence, expansion, and stability. The global financial system is designed to grow debt forever. Stopping the growth would collapse everything built on top of it. Debt has evolved into a political weapon disguised as economic necessity. Nations no longer fight wars with armies, they fight with loans. We're heading toward a future where governments don't just manage money, they manufacture reality. When currency can be created from nothing, when debt never needs to be repaid, and when power grows with every crisis, you have to ask, what happens when the system finally pushes beyond its own limits? No one knows. But the cracks are already appearing. And if you want to understand the next phase of global finance and the hidden mechanics shaping your future, make sure to subscribe. Hit the like button and tell me in the comments which financial mystery you want to expose next. More secrets are coming.